Hi, this is Eric Snell from Vanilla Equity, and now it's time for an update for the portfolio simulation. So as you might remember, we have three portfolios that we follow. One is a basic buy and hold portfolio, one is a let the profits run, and one is a buy the dip portfolio. So the buy the dip portfolio, there we don't necessarily always invest all the capital, and actually we have very little money invested right now because not much has dipped. In the let the profits run, we're fully invested, and currently actually we just have two holdings, Goldman Sachs and UnitedHealth. So these two stocks have been profitable, so every week we actually sell everything that's gone down and we buy what's gone up. And then the buy and hold, well, it's been now 12 weeks and it's going pretty good, I guess. A couple of percent of profit for doing nothing. And when we bought those stocks, of course, we did it with dollar cost averaging. So we bought for 10,000 one week and we repeated that 5 times. And that actually gave us a nice average purchase price. So we finally got some action when we look at the profitability of these portfolio simulations. In the let the profits run portfolio, we actually have now a loss of 4%, and in the buy the dip, we still have a profit. Now we're reaching soon the end of the quarter, and then I will try to explain what would the payout have been if this would have been your performance, if this would have been a portfolio that you had with Vanilla Equity. So vanillaequity.com offers the possibility for members to manage $50,000, and you can invest in vanilla stock, meaning in US stocks. It's just the Nasdaq, Dow Jones, S&P, really plain vanilla stocks, and you can buy and sell pretty much how often you want. You can also just buy and hold and cash in after a quarter, so 3 months. And the payout is basically 50-50. So whatever you make on the profit on the 50,000, you get half. And the house always takes 1,000. So if you don't make more than $1,000 profit, then of course you won't get anything. And then if your loss is more than 10%, your membership is revoked. So it's very, very simple. There's not different pricing for different type of investments. Everything is the same. It's really meant for you. If you're just starting out, you might have a good track record. You might be beating everyone now the last 5 years, but your savings are very small and you can't really get the benefit of the compound interest. So that's why Vanilla Equity exists, to help you solve that problem. So let's say your portfolio is 10,000 and you think that, man, you do 10% profit every year, but that's not really adding up. So what you can do is you can become a member of Vanilla Equity for 5,000, and then you have 50,000 more to invest. So then if you keep doing your 10%, that's going to be a lot of profit on your 5,000. So if you want to learn more about it, go to vanillaequity.com. I will continue to give these updates. You can consider them to be very exclusive, especially because you are probably the only one watching this, but I really want to make these videos just to make sure that we have sort of an audit trail, and you can always go back and see, well, what was really the portfolio performance. So in case everything goes well and I refer to this performance, you can always sort of double check what was really the weekly performance in the past. So I'm Eric Snell from Vanilla Equity, and I'll see you soon again.